2024 May-June Paper 1. On 1st May 2023, the balance on the motor vehicle account was $172,000 and the balance on the motor vehicle provision for depreciation account was $85,000. On 31st September 2023, Alex sold motor vehicle for $16,000 and received a bank transfer in full settlement. This motor vehicle had been purchased on 31st March 2022 for $36,000 and had a residual value of $8,000. Alex depreciates motor vehicles at 20% per annum using straight line method. A full year's depreciation is charged in the year of purchase but none in the year of disposal. Prepare motor vehicles provision for depreciation account for the year ended 30th April 2024, balance the account at this date and bring the balance down on 1st May 2024. It is crucial to identify the financial year that you're preparing the accounts for. As you can see the yellow highlighted part, on 1st of May 2023, the financial year starts. -1 from the month and add 1 to the year in order to find the end of the financial year, which should be 30th of April 2024. This is the financial year you're preparing accounts for. Now from here onwards, you can identify the previous 2 financial years in order to calculate the depreciation of the disposed motor vehicle. So you have the balance of the depreciation opening balance, income statement to be calculated, and disposal depreciation to be calculated. Now let's work out on the financial year of the previous period. It should be 30th for 2023, 1/5/2022, and then 30th for 2022, 1/5. Now, let's calculate depreciation for the disposed motor vehicle. As you can see here, this motor vehicle was purchased for $36,000. That's the purchase cost of the disposed motor vehicle. 20% depreciation straight line method. And the residual value is $8,000. So 36,000 take away 8,000, the residual value. 28,000 in a 20% should give 5,600. So let's calculate the depreciation. 36,000 take away 8,000, the residual value. Therefore 28,000 into 20% should give 5,600. Since it's straight line method, the same calculation will be followed for the next financial year, which is 5,600 again. So the total depreciation for disposed motor vehicle is 11,200. 5,600 plus 5,600. As per the question, there is no depreciation for the year of disposal. Therefore, the total depreciation for disposed motor vehicle should be 11,200. Now let's calculate for the existing motor vehicle. 172,000 was the opening balance. 36,000 worth of it is disposed. So take 172,000. Take away 36,000 to find the remaining motor vehicle cost, which is 136,000 into the depreciation straight line method 20% should give 27,200 as provision for depreciation for the current year. Now let's enter the disposal depreciation 11,200 on the debit side of the motor vehicle provision for depreciation account. Enter the opening balance of motor vehicle provision for depreciation, which is 85,000. And then enter the income statement value calculated for the current year, 27,200. As you can see here, the credit side is greater. Debit side has a total of 11,200. And the credit side has a total of 85,000 plus 27,200. $112,200. Since the credit side is greater, bring it to the total 11,200, 11,200. Take away 11,200 should give 111,000. Take away 11,200 should give 101,000. This should be as at 2024 April 30th balance carried down 101,000. And the next date should be 2024 May 1st balance brought down 101,000.